Okay. Oh, dear. Okay. All right. Please, can you all hear me?
Yeah.
Okay. Please, can you all hear me? Uh, okay. All right. So we are just going to get straight into action. So today's session is more of it's going to be more of trading itself. Okay. Like yesterday we did that of the introduction, what trading is about, who a broker, all those back and forth. And we were able to also log into the MT4. So I'm sure by now everybody has access to his or her MT4 or the trading platform. Like I said, we have MT5, we have other trading platform, but we have MT5 and other trading platforms. But we are, for educational purposes, we are focusing on using just the MT4. And then when you understand it, you apply the same principle in the other platforms. Okay. So what we are doing more of like what you need to know to help you become a very good trader. Okay. So we just go straight into action. Today will be more of practice. Now understand that when you create account with the broker, okay, when you create an account with a broker, it gives you access to the MT4. Let's say you verify account with the broker, you fund your account. The trading platform, which is either the MT4 or MT5 or any other platform, now becomes your workstation. That becomes your workstation. It's like you working as maybe an engineer, and then the HR or the company employs you. They employ you. That is where you do your verification, fund your account, and all of that. And then you now go to your workstation, the field, to now work. So the field is the MT4, but in your workstation, you need to know what's up there, like where to pick what's and all of those things to enable you do the trades. Okay. So yesterday we're like, oh, yesterday we yesterday we just placed trades, random trades with no understanding. Now we are going to do what you really need to understand to become a trader. So let's delve into it. I'm going to share my screen with you, and it's going to be more practical today. Uh, that, that one. Okay. Yeah. Hello. Yes. Okay. Hey, someone wants to join. Sorry, nearly forgot to. Juliana. Okay. All right. Please, can you all see my share screen? So there's always um there's always a risk warning that we try to caution traders that trading, like any other business, comes with a risk. Okay. But how do you reduce the risk or how do you do away with the risk? Is educating yourself. That's why we are all here to learn and then educate ourselves in order to help us in our trading journey. Okay. Example is if you are driving without a seat belt, okay, you are not educated to use seat belts, there are high chances you even lose your life. The same thing applies to trading. If you are trading without proper risk management and understanding, there are high chances you lose your money, like any other business as well. So we need to understand this. Okay. But this session, like I said, please take notes. Take notes. Okay. Um, Please take notes in this session. Please take notes. Please. Should be all about notes. If you have questions, you ask. This is the main deal. Okay. All right. So these are the topics we are going to look at: Forex market analysis, Forex trading risk management, Forex trading psychology. For these three, the one that I would want us to start with is the market analysis. Why? Because it involves a little bit of technicalities that you need to know. Okay, so we need to start with that first. Please pay attention to this session. Take notes. If you have questions too, you can just ask. Okay, all right. So the first one is Forex market analysis. So yesterday I mentioned that to be a successful trader, you need to understand forex trading strategies, forex trading psychology, and then forex trading risk management. Okay, or trading risk management. We are starting with market analysis, which falls under the strategies. Okay, so now, what is the market analysis or forex market analysis? It says trading analysis. Now, listen, involves the examination and interpretation of market data to make informed decisions about potential trades. Now, let's take each word and then explain it better for you to understand. When we say market analysis, say it involves examination and interpretation of market data. So, for instance, someone will say that me, I'm not going to use MTN again. Okay. That decision that the person has taken can be an informed decision or decision that he just did or made without any information or proper analysis. Okay. Now, with an informed decision, it means that you need to base your decision that you are making from data. If we say data, data just refers to information. Okay, it's nothing, it's not a big deal. Data just refers to information. Okay. And then you say the examination. So now that you have a data or you've made a decision from a data, how did you even come by the decision? You had to examine it. So I'm not using MTN as a network again, okay, or telco again. Why? Because from the data that I have, it doesn't encourage me to use. Okay, what data do you have? Maybe when I buy data, when I buy bundle, it just goes like when I buy, let's say, 10 CD bundle, it finishes maybe in 2 minutes. As compared to, let's say, Vodafone. I'm not doing any advert, I'm just saying, let's say maybe Vodafone. When I buy 10 CDs, it takes me days. So looking at the data from MTN or the information you're getting from MTN services and that of what's the name? Vodafone. Okay. You have examined these two data, like you've really examined them. That, oh, this is how much it costs me for using data for a day with MTN, and this is how much it costs me for using data for a day with Vodafone. Okay. So now then the question is that what's the interpretation after you analyze that data or examine them? How did you like interpret it? So now the interpretation is okay. If I should be using let's say 10 CDs on a data, let's say 1 gig data for just 1 hour, whilst I can use that data for let's say 10 gigs for 1 week or whatever with Vodafone, then it's better that I choose to what's the name? Work with Vodafone instead to save money because here I'm losing money. So the data or the information was there. You examine the information, and your interpretation was that you were losing money or you were wasting too much money. So then what decision that you chose, okay, or you decided to now take, then the decision is okay. If the data information I have from MTN is telling me that MTN and Vodafone telling me that I'm wasting too much money at MTN, then I'm going to stop using MTN and start using Vodafone. So you using Vodafone is informed decision. Informed. Okay. So sometimes people or traders, some traders place their trades without informed decision. They just did it. Okay. That one is out of luck. Maybe I guess like a luck, and we all know that luck is not sustainable. Okay. So, but before you place a trade, have a plan. And in that plan, you need to make analysis or get analysis done. And from that analysis, how do you even get analysis done? You need to have set of data. What data or what are you looking at in order for you to even place your trade or make that trading decision or trade decision? Okay. And then how did you interpret it? A practical example is, let's say around Christmas, okay, people maybe market women decide to, maybe around Christmas, they decide to now sell more of rice and oil. Okay, or let's say rice. Why? They realize that based on previous data, around Christmas, a lot of people do buy rice. So then that was the examination of the data. Then the interpretation was that, okay, if a lot of people are buying rice, then it means there are high chances of me going to make money. That was the interpretation. Then the decision, then the trader or the rice seller then took was, okay, then let me invest more money in buying rice or importing rice to sell to clients who will come in to buy rice or who will be requesting for rice. Please, you get it? So market analysis basically involves examination and interpretation of market data to make informed decisions. So before you place any trade as a professional trader or a very good trader, first you need to have access to market data. And it's simple. We'll all look at some of those things right now. And then from there, you examine, you interpret, you do the interpretation, and then you make a decision from that. Now, under the analysis, we have three main types of analysis. We have fundamental analysis, we have technical analysis, and then we have sentimental analysis. We are going to look at the technical analysis first. It was a little bit complex, but it's something that we can all do. Okay, technical analysis. Now, when we created the account, okay, you had your logins from the broker that you use those logins to log into the MT4, MT5 for trading platform. Okay. Now, technical analysis is done on the trading platform, which is MT4 or MT5, or the trader's web trader. Technical analysis is done on MT4 or MT5 or the broker's web trader or broker's trading platform. Technical analysis is only done on these platforms. Okay, so we are going to look at technical analysis, and then when we are done, we will then have a look at technical analysis, and then we have a look at fundamental analysis and sentimental analysis. Then tomorrow we'll look at trading plan. So everything that we've done so far, we'll put it all together as a single document tomorrow as a trading plan, and then you as a trader will be using that in your trading journey. But before we continue, please, is there any questions? Does someone have a question to ask, something that we can all have a look at? Please, any question? Anyway, can you all hear me? Roland, Louise, Leslie, Kinsley, Juliana, Okutu, Juliana, Ansa, Estella, Dennis, Clement, Caleb,
Yeah, we didn't hear you.
Abdullah, Sidu. Okay, but any
Yes, we
questions or
can
is
hear
okay?
you.
We're okay.
Okay, all right. Now the MT4 or the trading platform we have that of the MT4 for phones. Okay, you just have different interface, but it's the same things that you have to use in analyzing the market when it comes to that. But we have for phone, we have for tablets, and even with iPhone, it has different interface. Android, different interface. When you are using it on a phone, to a different interface, but it's the same thing. Okay, so I'm going to use the MT4 on computer. MT4 for computer. Use that to explain why. Because that one we are going to have a bigger screen to explore for you to have the things properly understood. And then from there, maybe tomorrow we'll go a little bit into the phone. But even if we are not, what you have to know today is understand the principle. When you understand the principle, later, if you're an active BDSwiss trader, you can just book one-on-one sessions for us to be looking into some of these areas. Okay, all right. So we are going to start it off from the MT4 for the PC. Let me share that screen now. Okay. Oh, I'm coming. Okay. Okay. So let's all have a look at what we have on here. This is the MT4 for PC, okay, or for computer, desktop, whatever. But like I said, the features of the MT4 is the same. Okay, just that it's like you having let's say EcoBank, you visiting EcoBank website and then using the EcoBank mobile app. So it's the MT4 for phone. We can assume that to be the EcoBank mobile app, and then MT4 for PC as the EcoBank website. Okay, so just get the principle and the parts right, and then from there we can build on that. Okay, all right. So from what we have on the screen, please have a look at the. Please, can you all see my MT4? Please, can you all see my MT4?
You can see.
Okay, all right. So look at the movement of the mouse. Okay, at the top left corner where I have the mouse, we have what we call market watch. So that is where you have the price, the codes like price changes, currency pairs, and all of that. You realize that yesterday on the MT4 phone, the phone version, at the bottom part of it, for both the Android and that of the iPhone, the first part you see from diagonal parallel lines. Okay, they are parallel and then they are diagonal too. They show the codes. So on the MT4 for the phone, for the PC, they call that market watch. But the phone, you call that the codes. It's the same thing. In that page or on that page, you just see the prices and the currency pairs. Okay. So this is it where I have the mouse. Let's say, for instance, you want to choose any of the currency pairs to trade. Let's say I want to trade USD That's the first one. I'll just right click on it like this. I'll see new order chart window. I just tap on chart window like this. Okay. And then I can now make or get my trade decision done. But when you select the currency pair, okay, you select that into another page or you drag that into another page. And that page is what we call the charts. The chart is the main workstation. On the MT4 that you have on your phone, the down there, the first one is the quotes, where in this case we call it the market watch. The second one is what we call the chart. Here too, we call that the chart. Now you need to understand the features of the chart. Okay. Now, look at the movement of the mouse. The red and the greens you see here are called candlesticks. Okay. The reds and the greens you see here are called the candlesticks. We have different chart types. We have candlesticks, we have line charts, we have bar charts. Somebody will say, oh, candlesticks are not cool for me. I don't like it. I want to change it to
Hello.
line charts. Yeah.
Mine is only green, oh, the chat. There's no red inside.
Yes. It's because you haven't set the interface yet. So
Oh,
the
okay.
template yet. I'll show you how to do that. Somebody's I
Okay.
want to have a line chart. Somebody's I want to have a bar chart. So look at the movement of the mouse. Okay, where I have the mouse now is just on the candlesticks. When I move it left and select this, we have bar chart here. When I move it right to the and choose that one, that's the line chart. Line chart. Okay, it's different from how each and every trader wants their charts to look like. Okay, so we have line charts, bar charts, and then candlestick charts. We normally use the candlestick because it's popularly used. Okay, popularly used. People would like to use that often. So why don't we also use it to make things easy for us? Okay, all right. Now our friend just mentioned that his is just green. On the phone, you can change the colors, you can change the patterns, and all of those things. But that's what we call that changing the templates. So you can just change the MT4 template or customize it to how you want it. So now we want to change this or customize it to how we want it. All you do is you right click on it. On the phone is different approach. Okay. But like I said, I'm showing you the principle. So like what we are talking about now is changing the MT4 chart interface or customizing MT4 chart interface. Maybe after this session, when you have some time in the evening, you can just go on YouTube, customizing MT4 chart interface. Okay. So you just right click on it like this, and then you come down to properties. Okay. You select properties like this. Then you will see these features. You see background black. Yes, we already have the background to be black. We have blue to be green. We have bear to be red. Please note these terms. Like I told you yesterday, that in trading it involves two parties: the buyer and the seller. The buyer buys when he believes that whatever he's buying is going to appreciate or go up in value. Seller sells when he believes that whatever is going to sell is going to depreciate in value. In the market, somebody can say that I am selling. Somebody can also say that I'm going short. Somebody can say that the market is bearish. If you hear these words, it's the same thing. Bearish, bear, sell, or short is the same thing. It means the market is going down. Sell. Buy, boo. Buy, boo. Long is the same thing. It means the market, expecting the market to go up, or the person is just buying. Okay. So that's like those are the terms. Now, if you want to change them, bulls or the buys are normally represented by green color. So most of the time you see news in news, wherever you have financial, whatever charts and those things, you see greens and reds. They're just popularly used. You can choose to change it to any color of your choice. Okay. So in this case, I can just change it to green. Just tap here and then type in green, and then bear red. I select OK. You see that the candle color has changed. So I want to change a gray background like this. I want to do away with indicators. We'll come to that, all of that. Okay. All right. So that is it for the charts. Now, when you move on the mobile phone too, there's a way to do it. So like I said, maybe if you're not able to tackle it in this video, I'm using this so that you can have a very good visual representation and then understand it better. But you can just go on YouTube how to set or customize MT4 charts on phone, maybe iPhone or Android. You see it. It's the same process. Okay. Now, look at the movement of the mouse. Top left, you see USDCHF. Just after that, you see H4. We call something the time frame. Okay. Time frame represents the duration or how the market performed in a particular time frame or duration. So we have 1 minute time frame. Look at the movement of the mouse. Okay, you come to the left, 1 minute. What that means is that whatever you see or the candlestick you see, the color green tells you that, oh, the market was bullish in that 1 minute, or whatever was, or the assets that we're dealing with appreciated in value in that 1 minute. Okay. Somebody too can choose that, oh, it's trading in 5 minutes, chart or time frame. Somebody will say that 15 minutes. Somebody will also say that 30 minutes. Somebody will say 1 hour. Somebody will say 4 hours. It depends on your trading plan. Let me give you a practical example. Let's say I sell clothes, okay, but I pick my stuff from Makola. I can choose to say that, okay, today I'm not going to take the clothes home. I'll sell them at Makola then. Or so in 1 minute, when you get to Makola, we have some boys out there and some boys inside. When you get, or let's say even Accra Mall, okay, some guys are just retailing. So they get into Accra Mall, they pick whatever they think people outside want to buy, they bring it, they buy it. Maybe in 1 minute, they go in back to the Accra Mall, they pick another set, like other set of things, bring them outside. Somebody can choose and say that every 1 minute I'll be entering Accra Mall, like I'll be getting into the market and getting out, in and out. Okay. So the time frame that person is using is the 1 minute time frame. 1 minute time frame. Someone to consider, "Oh, I don't really have time because Sally, I don't have time. I need to be doing other things." So even if I'll be doing this kind of business or trade, I would want to go in maybe in the morning and then come back in the next day morning. So I'll come in the mall, get whatever that I want to sell to people. I pick them up, sell them. When I'm done, I wait. The next day, I come back in there. Okay, so that's what we call time frame. It's the duration in which or it tells you how the market perform in a specific duration. So 4 hour time frame, in 4 hour time frame, let's say it starts from 6 a.m. It closes at 10 a.m. The new market starts from 10 a.m. It closes at 2 p.m. time frame. So like I said, these are the fundamentals or the principles, okay, or the the highlights. You can also take the time or the opportunity to also have a look at them from other sources or like online. Or if you are active with this trader, you can just book one-on-one session. Gets in depth, but whatever that I'm with you right now is very valuable. That you ask, and then from there, okay, I think it's a question. Okay, Kingsley,
That question. So
yeah,
who do we classify as an active BDC trader? I'm saying
please
that
speak up.
who qualify, like what's the like qualification to be an active BDC trader? Is it someone with just a demo account,
A BDC
yeah,
trader.
or a live
Oh,
account, or you know?
okay, no. So, okay. So the thing is that what we are doing now is free. Okay, it's free using all those resources, but we are backed by BDSwiss to do this. Okay, just to introduce you, and also whatever that I'm sharing here, we are sharing here. You can use them perfectly to be a successful trader. No two ways about that. But let's say if you want to have one-on-one sessions, okay, you need to be a BDSwiss. BDSwiss trader is somebody who has a live account, funded account, and if the person has even started trading, it's fine. Or just funded account. Just create a live account, funded account. So that when you trade, the broker also makes commissions of that to continue supporting this project. Okay. Now the broker is just a betweener. It's giving you all the technologies to have access to the market. Okay, internet, blah blah, like all of those things. So when you place a trade, it has a commission that it takes, like maybe 1 cent, all those like 0.02 cents and all. When you place the trade, the first negative number you see there is what they take as their share. Okay, like me asking you to buy something from Makola for me. You pick the thing at, let's say, 10 CD, give it to me at 12 CD. Basically, that's what the broker does. But because they are regulated, it's not outrageous. It's just around the same price. Okay. Kingsley, is it clear now?
Yeah, sure. Yeah.
All right,
So I
sure.
have a question.
Yeah.
They are saying if I have a live account, I can come
Mm-hmm.
for you to teach me one or two just now.
Yes. Yes. Are you on our Telegram page?
Yeah, I opened it yesterday.
Okay. So what happens is that on the Telegram, we post when we have these live sessions. But once you are even an active video Swiss trader, you don't even need to wait for openings or times where we need to do, book all of that. You can just call in anytime and then just tell them that, oh, I'm a BD Swiss live account or an active trader. And then maybe
Mm.
the account managers will just confirm and then they will book you. They'll just tell that, okay, maybe this day we are free or there's a session you can come. Okay. But if you're an active trader, it's just there's no too much delays or whatever. Priority first. Okay. Like as a priority, sorry. Get me right.
Okay, okay, thank you.
Yeah. All right, sure. So yes. So now these are the highlights. And then from here, where I have the mouse. Okay, when you tap on that, we have the terminal. Okay. Now in the terminal, we have these things that you need to pay attention to. Yesterday we looked at the balance, equity, and all of that. In the terminal on the computer, sorry, the PC PC, MT4 for PC2. We have all those things in the terminal. So the movement of the mouse, we have balance. Whatever I am using here is a demo account for practice purposes. We have balance, we have equity, we have margin, free margin, margin level. Okay. Now, when I move the mouse a little bit up, you see order. That's the order number. So in case you place a trade and there's a problem, you can now report that to the broker that, oh, I placed the trade. I have a challenge like this. Please have a look at it for me. And there's the order number. Then we have the time. Okay, you can see that in the MT4 for phone. And this one too. The other type, sell. Then lot size, like I mentioned yesterday, lot size is like a part of your money that you are taking to initiate the transaction. So if you have $10 and you take out lot size of 0.0, I said 0.01 is equivalent to $1, 0.10 equivalent to $10, 1.00 is equivalent to $100. So let's say if you have $10 in your account and you are going with a lot
Um,
size of 0.01,
I met somebody
that's
saying
you.
something else.
Okay.
I came to your place.
Yeah, please, I'm listening.
Somebody over there was
Okay.
saying that one equal
Okay.
to I think $10 or something. I don't know. He was saying something else. I was confused.
Okay. So in the account types, we have cent accounts. We have standard accounts. Okay. Most of the time, if you open an account with a broker, the account type that you have, the basic one is the standard account. That's why I use that as a reference, but that's what is mostly used. But they have center account where 0.0, they even have 0.0001. Okay. But what you have, or when you create BD Swiss accounts, the account type that you are going to have when you just create it at the go, the classic or the demo account that you are going to have is a standard account type. And with a standard account, zero lot size of 0.01 is equivalent to $1. Lot size of 0.10 is equivalent to $10. And lot size of 1.00 is equivalent to $100. Please, is it
Wait,
clear?
so 0.1 is
Zero, $10.
0.1 is $10. Okay.
Yes. Yes, 0.1. And like I said, with our account, most traders, unless you decide to now choose specific account, like maybe cent account, ultra, whatever account, zero spread account, that's when you can try to ask what's the account size or like what's the details in there. But the normal broker account is a standard account. And then with that, you have 0.01 to be equivalent to $1. Okay. Yes, so that's it for that. Now we now know where to see if you place your trade, where you see all those things, okay? And then where to select the codes or the currency pairs where we have the charts. Okay. Now what we want to do now is how to now trade. How to now trade. Okay. Now, please let's pay attention to this. This is where the whole action starts. In trading, we have two main market environments. Two main market environments. We have a ranging market and then we have a trending market. We have a ranging market and then we have a trending market. So when you open your charts, your MT4, and you want to start trading, the first thing that has to come to mind is from the chart that I am seeing, which market environment am I in now? Ranging market. Then you ask, what is ranging market? Ranging market is a type of market where prices keep bouncing between a higher price and a lower price. Like the normal English, okay? Range, age range, 12 to 15. In this case, the ranging market, the price bounces between a higher price and a lower price. So the lower price is the ground, okay, and then the higher price is the roof or the ceiling. Imagine that as you bouncing a ball between the bouncing a ball in your room. You bounce it on the ground, it bounces back to the roof or the ceiling, then it hits it, and then it gets back down. Now, how do you know this is a ranging market? A ranging market normally has a V or W shape. Ranging markets normally or always has a V, W, inverted V, or M shape. Now, just think of the definition. It says that the ranging market is a market that keeps prices keep bouncing between higher price and the lower price. So you can just draw them like just in your head, high, low. Okay. So from higher to low to high. That one alone forms a V shape. High, low, high. If it continues to come another low, then that's an M shape, inverted V. Now let's bring it to a practical life scenario. Okay. Let's say you bought a plot of, or let's say you bought a dollar at 14 cedis, and then it dropped in value to 10 cedis. Then it went back to 14 cedis. Then you think from that data or the data that you have, you can analyze that and interpret it in such a way that then it means there are high chances of the markets dropping or coming back down. It was 10 to 14 to 10. Then it can go to 14. Up, down, up, down. Please do you get it? That's what we call ranging market. So have it in mind that we have two types of market environments: trending markets, ranging markets. Ranging market is a market type where prices keep bouncing between a higher price and then that of a lower price. Higher price, lower price. That is ranging markets. How do you know you are in a ranging market? It normally forms a V or W shape or M shape. So we are going to look at one now. Um, please, are we okay to this point? Hello? Hello?
Okay, we're okay.
Okay, all right. So I said ranging market is a market that keeps bouncing between a higher price and a lower price, and it keeps forming a V or M shape, VMW shape. So when I open this chart right now, what I'm going to look out for is, am I in a range? First, like I told you, when you open the chart, first question that should come to mind is, which market environment are you in? Are you in a ranging market or a trending market? Now let's focus on the features of the ranging market. The ranging market keeps forming a V, W, M shape. Like the market, the price keeps going up and down. Okay. All right. So then, me looking at this, I see a V shape in the pattern. Okay. So I just select this. Look at the movement of the mouse. This line. I draw from here to here. From the ground to the top. Okay. And then from the top to the ground. Now, what does it mean? If I were to be bouncing a ball, okay, in this space, this should be the ground where I bounce the ball. Here, I'm going to select a horizontal line, M, and this should be the roof or the ceiling where the ball got to. So I bounce the ball here, back on the ground. Then it moves up, it hits the ceiling. Then it comes back to the ground again. Okay. Now, the ground where the ball bounces or you use the ball to hit first is what we call support. Okay. That's what we call support. And the roof or the ceiling that the ball um gets to and then reverses back to the ground is what we call resistance. Support. You imagine you standing on the ground, like wherever you are now. The ground is supporting you, and the roof is resisting you from going further, like going higher or something. But the ground is also supporting you, protecting you from sinking in or into the ground or something of that sort. Please, you get it to this point.
Yeah, we get it.
All right. So ground, up, ground. Now, let's say the ground or the first point where you bounce the ball was a price of, let's say, 10 CD. The price moved from 10 CD to 15 CDs. I go back to 10 CD and it came back a little bit down to 9 CD. What comes to mind? if you're a trader or not even a trader, just use the bouncing ball scenario. You bounce the ball on the ground, ground, ceiling, ground. Where do you think will be the direction now?
Up, upward.
Thank you. Upward. So imagine, just use that principle. First, which market environment? Ranging markets, trending markets. What's ranging markets? The price keeps bouncing between lower price, higher price. Okay. Now, we call the lower price or that ground, what is protecting the ball from sinking in the ground or getting down deeper, is what we call the support. And what is up there is what we call the resistance. Okay. Now, please note this. In trading, you just buy and sell. So you buy at the support, you sell at the resistance. Buy at support ground, sell at resistance, ceiling or roof. Buy at support, sell at resistance. So in this case, the price moved from down here to up, which is the roof. So support, resistance. Then resistance, it came back to support here, somewhere here. It was just moved down a little bit. And then from support up here, it went up, then it came back down a little bit and currently going. Where do you think the price is going to go again? What's the maximum price you think this is going to go? Is it where do you think it's going to go? Is it up more or is it going to get down?
It will go down.
Okay. So from this, okay, if from down to up to down,
Up.
where do you think it will go? Yes. Down, up, down. So just use the ball bouncing scenario. You bounce the ball on the ground, but it hits the ground down,
Boss.
which is the support.
Shading.
Which is the support.
Yeah.
Then it goes back up.
About
Estelle, please, can you mute
12
your
or
mic
so.
for us? Estelle, please mute your mic for us. Okay. All right. So down, up, down. Then where's the direction you think we'll be going into? Please, the whole house.
Up.
Okay.
Up.
Up. Okay. So
It
in
will
this
go up,
case,
yeah. Oh, sure.
up. Okay. Yeah. So now that we have all decided that it's going to go up because we are using the ball bouncing, idea, I'm also going to buy because he said buy at the support, sell at the resistance. So we are going to do it together. I'm going to buy now. How do you then buy? On your screen or wherever you are, okay? The currency pair we are looking at is USDCHF. And based on our analysis, we are all going to buy and hold it. Okay. How do you buy? You right click on it. If you are using the phone, you just tap on the screen or the chart and you see trade for the iPhone users, and for the Android, you see new order. Okay. But for me, I'll just click on one click trading. Okay, like this. And then you type in your lot size 0.01 or something. For a beginner, like I said, before you can build the confidence, I would want you to start from a smaller lot size so that market pullbacks and those things don't, put any fear in you. You just relax because your funds will be more protected. Okay. So I have chosen 0.01. And from our analysis, we believe that it will go up. We said that a buyer buys when he believes that whatever he's buying is going to appreciate in value. When we say appreciate, it means go up. And the same as buy or long or bull. So you and I just did the analysis. So we are all going to buy. I'm going to buy too. You can also buy from your end. Okay. Okay. So I bought it. Now that we've bought it, see that immediately we bought it. Here's mine, USD
Can you,
CHF. Immediately we bought it. Immediately we bought it. You see 0.015. That is from my end. That is the spread that the broker takes for giving you all the technologies and everything for trading. Okay. So I have bought it. You can also buy it too. And then let's leave it and see how far it will go. Please, are we okay to this point?
hello. So the
Yeah.
USD CHF. So you say you want to buy, I should
Mhm.
right click it, new order.
Yeah, are you yes, in
Oh,
new order. If you are using Android new order, then you where yesterday we changed the lot size,
hello,
change it to 0.01. Yes, hello.
new order, right?
Yes, new order. Okay.
I'm
Dennis,
using
yeah,
the
new order.
I'm using the laptop.
And oh, okay. So then, yes, so new USD CHF, new order, and then you see we have symbol, we have volume.
Okay.
Okay, the
Then
volume part, type in
where did
zero
it?
point zero 0.01.
Yes. Okay.
The volume type 0.01. Then you see buy by market.
0.01. Yes.
Yeah, buy by
And I click
market.
buy by market.
Yes,
Okay.
right. So that is what we have all decided on. Why did we do that? Because we saw the market to be in a ranging market where the market kept moving from bottom to up and then to bottom. And now, based on
So I
our
I have a
analysis, what
question.
we have. Okay, yes, yes, please, I'm listening.
And so when I bought, you're saying the negative I see
Mhm.
initially is the spread that
Spread,
the
yes,
company takes.
yes, yes.
Okay.
Where you buy initial, that's
Okay.
what you see there,
Okay.
and it's very small, like 0.01 something most of the time. 0.1, zero
But
point 0.1
if
something, like 0.15.
I have a question.
Yes,
But if you
yeah, I'm
are choosing
listening.
like a bigger the volume, if you're choosing a bigger one,
L- y-
it,
Yes, your lot size will also increase.
and the negative also increase.
Yes, it will also increase.
Or
So it's a
okay.
percentage of the lot size. Yeah.
Mm,
So what you would do is that whenever you place a trade, have it in mind that you're also going to pay the broker for
okay.
using its technologies and all of that.
Yeah.
But the bigger your volume, the bigger they are cut to. The smaller your volume, the smaller they are cut to. So it
Okay.
all depends on how, yes, you go about it.
So at what
So this
point
is
does
our
it?
analysis. Please come again.
It was asking, so like at what point do you see like the actual changes in the whether it's going down or going up? Because when I placed order, it was negative, I think 20.
Yeah.
It's still there
Okay.
for some time. So I don't know if
Yes. So the whole thing is that they don't deduct it from your money immediately you place it. But once you
oh
place it, it's shown that this is the fee. Okay.
okay.
So when your trades get into your profit zone, it means that they are taking off those debts or those loss, which or the
Okay.
fee that they are charging, and then you are now in a profit. So it's built in there. Unless you close it right now, that is when it will be deducted from your balance. But if you don't
Okay.
close it, it's like if like they've loaned you to do the
Yeah.
job, just do it and get a profit and let's go. Please, do you get it?
Yeah.
So now
I
that we
think
have placed our trade, tomorrow we have it. Mhm. Yes. Please, I'm listening.
I'm saying thank you.
All right, sure. Yeah. So that's the trade that we have all placed just to, experiment with the idea. So we have looked at ranging markets. Now that we said that, okay, when it is from bottom to up to bottom or like down, up, down, then the chances that it will go up again is high. Then you will now have your risk appetite and say that, okay, if it doesn't go and it reverses to, let's say, $1, I'm going to take my loss. $10, I'm going to take my loss. My loss. Okay, so you just have to have that plan in mind. So with this one, if I am placing this trade with a capital of say, let's um, say whatever amount that I have in my balance, what I'll be doing is that, okay, at this point, if I were to be placing this trade, the maximum loss I would want to take would be maybe -5. Okay, that's for me. It depends on each person's risk appetite. Okay, the person, somebody will say, "Oh, 5 is too small. I can hold it so that because the market you already know, he is in a ranging market where the market keeps going up and down, up and down. So then there are chances that the next one also keep where it will go up and down again. So he's not even going to bother himself in closing something or adding another trade to it. Okay, so that is it for the ranging market. Please, is it clear to this point? Hey, are we here? Hello?
Yeah, it's clear.
Yeah, it's clear.
Okay, all right. Now, in the ranging market, the approach that we use is called the price action approach. So first, you know the environment. Now, when you know the environment, you now use the approach. Which approach do you want to use? Is it price action or indicators? Price action is just when you are just looking at the prices like raw like this, finding the higher price, the lower price, the V shape, V pattern, draw your lines, and then you place your buy and the sell. That's for the ranging markets using price action. Price action has just got to do with prices and pattern recognition, basically. Okay, so now somebody will say that, oh, maybe this price action there's too plenty for me. I can't. I'm not sure I can do it. So what he also wants to do is, okay, I want to use another approach for the same ranging market. And that approach the person wants to use is maybe indicator approach. Okay. Now I will suggest we use one indicator for now, and then later we what's the name? We go by other approaches. Okay. Now the indicator I would want you to use for now is RSI, relative strength index. Relative strength index, RSI. Where do you select the indicator? Move it top here to insert. But those using the phone, okay, when you go to the chart, you see the bottom, the down there, we have quotes where we have the numbers and the alphabet. Then the right side, we have the chart. Now, in the chart part, look up there, okay, on the top part of it, you see some plus sign, and then you see some F sign. The F sign, the F sign is where we have the indicators. But those using computer, you just tap on the indicators where we have file views, insert. Then you select indicators. Okay. Well, from the indicators, you see moving averages, relative strength index. Select relative strength index. Then you select OK like this.
Um, please do
Okay.
it one more time. So go to insert, click
O-
indicators.
o- yes, insert indicators. Then you come to relative strength index. If you're on the phone, are you PC? Are
I'm
you
not
using
seeing
your
that as a
computer?
picture.
PC.
Yeah.
Okay. So if you're not seeing it, then maybe I have been using it most of the time. So
Do you see the
come down,
relative
you
one?
see trend. Yeah, you see trend, and then you see oscillators.
Just 1 second.
Insert
Insert.
indicators.
Mhm.
You come down, you see trend, and then you
Trend.
see
Uh-huh.
oscillators.
Yes.
And select oscillators. Then you
Yes.
see relative strength index.
Uh-huh. Okay. Okay.
All right. So with the relative strength index, this is how it's
But when I
used. So like I'm saying,
when I
I'm showing you like
selected it, they are showing me a dialog box.
no. Are you using a phone or PC?
Computer. PC.
Yeah, so right, you come insert, then the box will come, the dialog box or whatever. Then you come to indicators.
Yes.
In Then you see trend.
Yes.
Then you see oscillators.
Yes.
Then the drop down will come more. Yes. Then you see relative strength index in the list of indicators we have there.
Okay.
Please, have you seen it now?
Okay, but please click on it and let me see what comes.
Yeah. So if you click on it, there a box. Okay. Yeah, a box will come, and then from that
Okay.
box you tap on OK. You select OK.
Okay. Okay.
All right. So you see some lines drawn on the screen. Okay, or some
Yeah.
yeah, some zigzag lines be drawn there. Now it has the upper band or like the upper part of it, which is marked 70, and then the lower part of it marked 30. Okay,
Yeah.
70, 30. I told you that the market keeps bouncing between a higher price and a lower price. So here, the higher price range here is the 70 part, and then the lower is the 30. So we mentioned that you sell at the higher part and then buy at the lower part. So sell at the 70, buy at the 30. Okay. So if you look at it this
So
way,
you sell at the
the movement of the you sell
you sell
you
at
sell
70.
at
Okay.
resistance, which is the higher, and in this case is the 70 number. Okay. 70. And then you sell at the lower part too. You
No.
buy at the lower
Okay.
part, which is the 30.
Okay.
Yeah. If you see the movement of the mouse, but understand that trading like any other business, okay, you can buy, let's say you can buy a phone with the belief that, oh, this phone is going to appreciate in value. So I'm just going to buy it at this price and sell at this price. Maybe the time you buy it, nobody is even coming in to buy. So what do you have to do? You have to wait, or if it's depreciating too much and you're not comfortable, you can close it. And in this case, when an asset is depreciating, you can say that it is taking a loss or you took your loss. Please do you get it? So you need to also have that risk capital that, oh, in case I'm not making any profit on this asset, the maximum loss I can take is maybe $1 or $2 or $10, depending on your risk appetite and your trading plan. Which tomorrow we'll have a look at the trading plan. Okay. But most of everything that we are doing here, it has the same thing on the phone. Just that this is just on a PC for you to have a bigger picture and another understanding. Okay, so maybe some of the terms that we use here or the approach, if you're not clear with it, later when we are done, you can do settings on do some search on YouTube to serve as a guide. Okay. Or like I said, you can just book one-on-one sessions to also come in for us to take you through properly. Okay. 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 All right. So that is it. So now this is what you have to always have in mind. When you open your chart, ask yourself, which market environment am I in? Am I in a ranging environment or I'm in a trending environment? Now let's pick the ranging. If you're in the ranging environment, you see the market bouncing between a higher price and a lower price, a higher price, a lower price. Okay. Now the higher price, we call that the resistance, and the lower price, we call that the support. You can liken it to bouncing a ball in your room. You bounce it on the ground, and then it bounces up, it goes back to the roof or the ceiling, then it comes back again. So in this case, it means that if when it gets to the roof, there are high chances it will come down. I told you that when you are selling, the idea is that whatever you are selling is going to come down or is going to depreciate in value. So you sell at the top, you buy at the bottom, or you sell at resistance, buy at support. Okay. Now that you know you are in a ranging environment, how are you going to approach this market? There are two ways to approach the markets. You can use the price action approach, or you can use indicator approach. Now we use the price action where we just look at the price and the pattern. We're looking out for a V or W shape, which we saw. We just picked our bottom, our tops, and then we placed our trade. Please, you get it. right? So that is it for it. And then we also decided to now use the indicator and also see where to even find the indicators. There are a lot of indicators, okay? But for a start, like I'm saying, I'm just showing you the basics, and the basics that I'm showing are also very, very important. You can choose to rely on these things. Just read wide around it, ask more questions, and then you can use what I'm showing you to do your trade executions and all of that. Okay. So that is it with the ranging markets. Please, any questions before I go to the trending market? Please, any question?
Yeah, that was
Yeah.
so sometimes it doesn't come and then touch where you're supposed to touch, but then it just reverses and then it starts to go down. In that situation, what do you do? Do you place your
No,
um other
no,
okay?
no, you don't do it. You don't do it because you have a plan. Your plan is that, let's say I a price, let's say I bought $1 at 10 cedis, okay, and it appreciated to, let's say, 20 cedis. Or dollar was 10 cedis, it went to 20, it came back to 10. I'm like, oh, when it was 10, I missed it. Oh, now I'm going to buy it. Then I buy at 10. My plan is that when it gets to 20 cedis, then I'm going to sell it off. So you sell at the resistance or the highest price, and then you buy at the cheapest price. The question is, it hasn't gotten to 20 cedis yet. Why do I want to sell? So you wait for it to get there. If it doesn't get there, you don't do it. Unless in your trading plan you have a room or a space or an allowance that, oh, in case it doesn't go and it gets to this point, I would want to just give it, sell it or something. But one thing you have to notice that you need to have a plan. Tomorrow we'll talk in depth about plan, trading plan. Okay. When you have a plan, it's already predetermined. You have that written down already. You dare not change it unless you want to change it. Because there's a saying that if you fail to plan, you plan to fail. You don't stick to the plan and you keep changing, you are definitely going to have a challenge or at some point in time. Okay. So Kingsley, is your question answered?
Yeah,
Yeah. Okay. All right. Please, any question on the ranging market before we move to the trending market? Okay. All right. So we are now going to move into a trending market. Okay. Now, with a trending market, I just want to get a currency pair for us to. Okay. Okay, so now please let's have this definition. A trending market is a market that keeps going in one direction. A trending market is a market that keeps going in one direction. In one direction. I'm just looking out for a trending market. Um, oh, please, I'm coming. Please, I'm coming. I'm coming. I'm coming. I'm coming. Somebody wants to join. Let me add a person. Okay. A trending market is a market that keeps moving in one direction, which means that we have two types of a trending market. We have the downtrend, and then we have an uptrend. Downtrend, uptrend. A trending market is a market that keeps moving in one direction. So it can be an uptrend or it can be a downtrend. Now, the same way we approach the ranging market with indicators, and at the same time, we also approach it with a price action. Indicators, with the indicators, we are going to choose one indicator for a trending market for now. So when we gain experience, we can now change to other indicators. Okay, so the indicator I would want you to use for this educational purposes, moving average. So you go to the indicator part, indicator part, go to insert indicators, Then you scroll down to trend, insert, indicators, trend. Then you see moving average. Okay. Now the moving average, you see period. At the period side, tap there and type in 100. It's just setting. Somebody can choose to say, well, I'm just using 10 period. But we are using 100 period. Okay. So type in 100 and then click OK. Okay.
The shift should be 0.
Yeah, shift to be 0 still. Moving average. Okay. All right. Okay. Please, are you all looking at it? Now, this a trending market, like I said, is a kind of market that moves in one direction. Now, when you are using a moving average, okay, I told you that you sell when you believe that the price is going to go down, and you buy when you believe it's going to go up. Okay. Now, from this, I think let me get something that is different from what I've just shared with you. Coming. Come on. Oh, I want something that's market that is trending. Okay. Oh. Okay, let me see. Okay. Please, can you all see what we have on the screens? So with a trending market, okay, if you are approaching it with indicators, what you have to do is that you sell when the price crosses or the candlestick crosses the moving average down, like this. Yeah, where I have the mouse. So you realize that it sold. It started selling from here. When the price crossed down, it sold from 105.695. Then it came down to this point, and then it reversed. So you realize that when using moving average in trending markets, that is, you are using indicators to trade a trending market. You sell when the candlestick crosses the moving average down, like this. You sell when the candlestick crosses the moving average down, like this. Then you buy when the candlestick crosses the moving average up, like this. Realize that when it crossed it here, it went up a bit, it pulled back, and then it crossed back here, and then it kept moving up. So somebody who is looking forward to sell, okay, sell
Sorry,
this currency.
can you please
Yeah,
say it one more time? I wasn't.
okay. When you are using moving average for trading a trending market or the trending market, okay, you
Yeah.
use you sell when the candlestick crosses the moving average down, and then you buy when the candlestick crosses the moving average up. So the movement of the mouse, this one, the candlestick crossed the moving average down. It was sold. It sold, like it kept coming down, devaluing or losing value. Then when it got here, it bought. It crossed the moving average up here, this price, and then it kept going up. Okay. So what you have to do is that know the market environment in which you are.
Hello.
Yeah. Yeah. Can you hear me? Hello? Hello? Hello?
Hello.
Oh, is it from my end? Yes. Okay, yeah, Dennis.
Sorry. Yeah, it's from my end. My network isn't the best, but you said buy when the candlestick crosses.
Yes, the moving average down.
I didn't hear it.
So, yeah, yes. No, you sell. You see, the candlestick, the
Down.
moving average now becomes like a boundary or a border.
Okay.
Okay. So you sell when the candlestick crosses the moving average down, and then you buy when the candlestick crosses the moving average up. But one thing that like I keep saying is that, like any other business, let's say you buy or you sell, you knowing based on the previous data that you have examined and interpreted. Sometimes the market might not go the way you are expecting. So you have to still, even though you have placed that, you have to now still have your stop loss or where do you want to get out in case the market doesn't go your way. Okay.
So
And one thing that you have, Mhm. Yes, I'm
hello,
listening, please.
Dakota.
Yeah, 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 I'm listening. Yes, yes, I'm listening. Dennis. Okay.
So this market, what like for example, what we bought today, the USD CHF,
Yes.
does it fall under a raging market or a trending
Okay.
market?
Okay. So we choose that. Let me open it again. This is it. Coming. Okay. So when we open it, we're like, okay, we're looking at it from this price and here, this point to this point. Okay. So this was the cheapest price. It went as high as this price. Okay. That is what we were seeing or we were looking at. So we saw it to be a ranging market. Okay. So this was our reference from here to here. So it was a ranging market to us. Please, you get it. Somebody, and it depending on the time frame that we are using. We are using a daily time frame here. Now, somebody, let me give you an example. Let's say I use the Makola scenario. The person gets to the market 1 minute, he goes in, then he comes back, then he goes in. Such a person, if you ask the person, Charlie, how is the market going? You say that, oh, let the entire crowd, like market is not really moving. But somebody who came there, let's say in the morning, 6 a.m., went home, came back at 12, and went home and came back at, let's say, 6 p.m. We say that market has been good. Why? Because he is using a different time frame and he is seeing the market from a different point of view. Please, do you get it? Dennis, please, do you get it? Hello?
Hello.
Yeah, Dennis, please, do you get it? Hello? Hello?
My
Okay.
network is really messing up.
Yeah,
So
no, no problem.
um,
No problem. Yeah, no
hello.
problem. But I don't know if you
Okay.
get the
Okay.
idea. Yes, but do you get the idea? Yeah, do you get the concept?
Yes, please. Get it.
Okay. So that is it. So this same market that we are seeing as ranging market, looking at where we choose as our reference, somebody can also see it as a trending market because he will say that, oh, the market has been trending, moving up from here. Okay. So it keeps going up, up, up because it's moving in one direction. It started from here and it keeps moving in one direction. Okay. But we choose a different reference, and that different reference is this. We choose it from here. Here. So if we are choosing it from where I have the mouse, then it's not going up at this point. It just went up like this and then came down, and then chances that it's going up again. So what we'll do is that tomorrow we'll have a trading plan, and when we have the trading plan, most of these questions will be answered. You will choose in the trading plan, you will choose your time frame, your market environment, the pairs that you want to trade, and then it will be a bit clearer. Okay. So I think we were looking at the. Please, any questions again?
Yes, Dakosa,
Okay. Yeah.
how would I be able to access this lecture?
Okay. So what we do is that I think, yeah, I'm recording it. So after this, we will ensure that we share it with you. Okay, maybe today
Through
or
which medium?
in the same Telegram. And those who
Okay.
attended, yeah, I'm sure it will get to you.
Yeah.
All right. Maybe by close of tomorrow, when we are done with all these sessions, then we'll put all that together for you. Okay. All right. Okay. So yes, so for the trending market, okay, so that the trending market is a market that keeps moving in one direction. Where is the? I think I choose a pair, some currency pair. Coming, coming. Okay, please, I'm coming. I want to get a pair again. Okay, I'm coming. So one thing is that after we going through all that we are going through, you also need to ensure that you also do some personal studies, and through that you get to understand that, oh, maybe there are some few things that you are not getting. You just contact and then we explain it further. Okay, because if you don't ask questions, we might not be able to also know the exact challenge that we also need to have to deal with. Okay. So yes, now we are now going to also look at the trending market. Okay, so we looked at how to use the moving average in the trending market. We are also going to look at how to use price action, where you just look at prices and patterns, okay, to make a decision. So now, from this, we are using a daily time frame, okay, a daily time frame. So first of all, we need to choose, because we said a trending market is a market that keeps moving in one direction. So it can be an uptrend or it can be a downtrend. It can be an uptrend, because uptrend is a market that keeps moving in an upward direction, and a downtrend is a market that keeps moving in a downward direction. Both of them are trending markets. Okay, all right. I'm coming. Okay, just want to have a pair that's okay. Okay. To have something. Let me see. Gold. Good. So, like I keep searching pairs. Sometimes you have your trading plan and you are looking out for some pairs to trade with. You just have to know first the environment. Now that I know which approach, indicators or price action, indicators for trending, I'll use moving average. Ranging indicators, I'll use RSI. Ranging price action, I'll use support and resistance. Support and resistance is what I mentioned. Like the roof is the support, the roof is the resistance, the bottom is the support. So you buy at the support, that's buy cheap, sell expensive. Okay, just use this as a illustration. This one. Okay, so a trending market is a market that keeps moving in one direction. Now looking at this, okay, look at the movement of the amounts from here. If I choose this as the cheapest price, okay, the market kept moving from here and then it kept moving up and then got to this part. Okay. Now, please note this. When using price action in a trending market, okay, or trending market environment, the tool to be used is the trend line. The tool you need to use for price action analysis in a trending market is a trend line. Trend line. In the ranging market, you pick horizontal lines, which are called the support and resistance lines. Trending market, you choose trend line. Now, if it is an uptrend, you draw a trend line to touch at least two higher lows. Okay, so there's the first one. That's the lower price that we are choosing as our reference. We select our lines, we draw it like this, and then it touches the first higher low. First higher low in the sense that the price keeps going up. Okay, so the higher, or let's imagine you to be the price or the candlesticks to be a human being like you. Okay, You label your head or the top part of your head as your high, your foot as your low. When you climb the stairs or the stairs from the ground floor to the second floor, where your head used to be, which was the low, which was your high, now becomes your low. Okay. Where you used to have your head hit as the roof, when you climb to the first floor, that is where you are now going to use or you are going to stand as the support or as the ground. I don't know if this illustration makes sense. It's something you can work with. Please, is it clear? However, you can, like I said, take notes. This session, you need to take notes. You need to take notes, even if they are not clear because of maybe time. You can also check them up on YouTube, or maybe you have a session, one-on-one session to explain this, or I'll send a video to again so that you go through it, and maybe listening to it over a period of time can also help. So you draw your line, you touch at least 2 higher lows. That's an uptrend. Okay. Now, what you then do is that now that you've drawn your line to extend into the future, what you do is that you wait for the price to either get rejected by the trend line or the trend line gets broken. Let me explain this. So look at this. Look at this very well. Here, the price moved up, and then came back down, and then moved up again, and then came back down again. Okay. Now the thing is that the market started from here, let's say 5 CD. We went to 7 CD, then it pulled back to 6 CD. Then we went to 9 CD, then it pulled back to 8 CD. Okay. Now the thing is that if 8 CD rejects it, okay, then there are high chances that the price is going to keep going up higher more. A practical example is when Ghana CD started moving from the 6 CD, okay. It was $1 to 6 CD. Then it went to 8 CD. It came back to 7 CD. So 6 CD, 8 CD, 7 CD. Then went to 9 CD and came to 8 CD. Then it went to 12 CD. Then it keep going up to go to 14 CDs. Okay. Now, if you are buying in an uptrend, okay, you wait for the trend line to keep rejecting the price so that you buy. So at this point, if the market is already moving, you don't buy while it's going. You wait and buy at this point, this price. This one too, you wait for the price to drop a little bit to touch the trend line, and then you buy. But if unfortunately, the market doesn't keep going in the uptrend or in that trend that you are looking at, then it breaks the trend line. When we say the trend line is broken, that's what I mean. Instead of it, okay, look at this, went up, it came down, then it went up like this, then it came down like this. Instead of it to bounce or reject and go up, if it doesn't go and then crosses the trend line down like this, then we say that the trend line has been broken. So in the trending market, you can choose to trade in a trend, and that is called trend continuation. Or you can choose to trade trend reversal, where instead of the trend to keep moving in that one direction, it reverses. It doesn't even go in that direction again. Okay. Now, like I said, this part is very technical, and as a beginner, you would have to just take your time, like look at them, also take your time to also read a little bit online, and then sometimes you come to the office or call us for in-depth training. But the understanding of the basic principle you need to get is that when you open your chart, we have two main environments: trending environment, ranging environment. In the trending environment, market keeps moving in one direction. In the ranging and market environment, prices keep bouncing between a higher price and that of the lower price. Okay, basically that is the concept. Ranging markets, trending markets. Now, in each of the markets, you can approach them using the price action, or you can approach them using indicators. Okay, so we said that okay, if it's trending market, we use moving average indicator. But if you want to use the price action in the trending market, we use trend lines. If we are trading in a ranging market, okay, in a ranging market and want to use indicators, we use RSI. Now, the RSI is not the only indicator, but for educational purposes and practices, we just use that for you to get used to the market. Okay, if you want to use price action, you draw your line to represent the roof or the top part, and the line to represent the bottom part. The bottom part is then called the support, then the top part is called the resistance, because they're resisting the price from keeping or keep going higher. Okay, basically that is that for trending markets and ranging markets, and all of these things fall under technical analysis. We're also going to look at fundamental analysis and then sentimental analysis. But please, are you okay to this point? Is it something that you can work with, or do you have any questions? Roland, Louise, Kingsley, Juliana, Estella, Ebenezer, Dennis, Clement, Caleb, everybody. Yeah, Dennis. Yeah, Dennis.
Yeah,
Yeah, is it okay? Is it something we can?
it's okay. We are cool.
All right, sure. Okay, all right. Thank you. I'm going to then close the screen. Okay, all right. So I'm going to share the screen again so that we continue. Okay, so what we did basically falls under technical analysis. It's a bit technical, like you said, but with the fundamental analysis and sentimental analysis, they're a bit straightforward or something we can all handle. Okay, now let's get into fundamental analysis. What's fundamental analysis about? Basically, fundamental analysis has got to do with economic data reports and releases. Economic data reports and releases. So sometimes you can just Google economic calendar. Okay, you can just Google Forex economic calendar. Then you see a whole lot of news coming up. Or you can use the BD Swiss websites, which I'm going to share with you. Oh, please, can you see my screen? Hey,
No.
okay, I'm coming. I'm coming. Please, I'm coming. I'm coming. I'm coming. I'm coming. Okay. Okay. So we are going to look at economic calendar. Okay. Like I said, you can just Google maybe Forex economic calendar. There are a lot of them there. Basically, they tell you on the economic calendar, it tells you when some economic data releases will be coming out, reports like interest rates, unemployment rate, and all of that. So some people just use economic or fundamental analysis where it has got to do with economic data to just trade. A practical example is, let's say yesterday's report or report on unemployment rates was was um was, let's say, 10%, and today's unemployment rate is 15%. It tells you that it has increased. So unemployment means that a lot of people are not working. Now, if a lot of people are not working, what that means is that a lot of people don't have jobs to do. If they don't have jobs to do, that means they can't buy anything and sell. Like they can't just, they don't have purchasing power to do anything. So what that also simply means is that the economy is weak. So if I'm in Ghana and the unemployment rate is getting higher, where people are not working, then it means that the economy is weak, which means that the currency is even more getting more weaker. So then I will have to just sell my Ghana cedis for some dollars. Okay, basically that is how traders use fundamental analysis to trade. Now, when you come to the BDC's website, you go to research. Okay, you go to research. Please, can you all see? Please, can you all see?
Yeah, yeah, it is. Yeah.
Yeah, go to research. You come to tools. On the tools, you see economic calendar. Select it. Economic calendar. Shit. Oh, why? I'm coming. I don't know. Okay, I'm coming. Okay, it's loading. Okay, so the BDC economic calendar. This is how it looks like. When you come there, you see all the economic data or reports that are going to be released in a week, so that you also use that in your planning. Okay. Uh, Please let's wait while it's loading. So basically, technical analysis is just done on the MT4 or the trading platform. The fundamental analysis, you look out for economic calendars. So now look out for economic news that will be coming out. And then you also choose some of them, make a decision around that. So like this BDSW's economic calendar, you come to filters or the date. So today's date is sit. Okay, select sit. On the sit, you see all the news coming out. Industrial production, month to month, balance trade, all of these things. But let's say all of these countries I'm not even interested in because I'm going to trade a currency pair of, let's say, USD. So, but I need a high impact news. When we say high impact news, the news that affects the market. Sometimes you'll be trading, you'll be buying, and at a point you see the market selling, and there's something happening in the market. So you can even check out from your data or your technical analysis point of view. You go and check from economic calendar and see what really happened. Was there some news? What happened? Okay. So you select high like this. Then which country? Let's say we just want to do US, America. Okay, we select the country, select US. Okay, so US doesn't have any high impact news. Let's see if it has some medium impact news. It has medium impact news here coming out today. Crude oil stock change, all of those details. Okay, so people also use these numbers to also, or this news,
That
economic.
was, I think you're not seeing your screen now.
Yeah.
Oh, okay.
Oh, can you see?
No, you're not sharing your screen. Yeah.
Oh, I'm coming. Can you see?
Um. Yes, it's now loading. Yeah.
Okay.
I think you have to
Oh, sorry.
go
I
back a
showed it.
little bit.
Yeah. All right. So when you select, like when you go to the BD Swiss website, you go to research, you come to tools, then you go to economic calendar. Then this page will appear. Okay. Then on this page, we have today's date is set. You select set. Which kind of news do you want to hear? Maybe medium news, high impact. Okay. Which country? United States of America. So you then see that we have all this news coming up. Now, the thing is that sometimes you have the trade moving in maybe one direction, is buying, is buying, is buying. Then at some point you see something happening and then start selling. Then you can go back to this economic calendars and then check what really happened. Maybe around 12:30, there was news on unemployment rate on USD, and then it had impact on the market. Okay, so as a trader, you need to be aware of all these things so that you just don't trade. You trade with this decision, this information, data, so that decision that you make is well informed. Please, is it clear? Please, is it clear? Is it okay?
Yes, clear.
Okay. That's for, so it's very simple. Fundamental analysis is very simple. Okay. But you can read more around that, like I mentioned. Okay. We are now going to do sentimental analysis. So with the sentimental analysis, if you have your phone, you can download the BD Swiss app And then when we are done with the session, I'm going to move on to the next topic. When we are done with the session, we will look at the BD Swiss app, how to use the sentimental analysis. Okay. I'm going to stop sharing the screen and then share another screen. Okay. So we've spoken about technical analysis, fundamental analysis, then sentimental analysis, which I said if you have a phone, you can download the BD Swiss app. Then I'll show you how to go about that one too. Now we said that before you can be a successful trader, there are 3 topics you need to understand: strategies or analysis, which we have looked at. What I've shared with you, they're very, very valuable, like is of value. You can decide to read more about it because in the first day, the technical will be a bit complex. But when you keep practicing with even your demo account and all, you get used to very soon. Okay. And then forex trading risk management. So I said technical analysis, risk management, and psychology. We are now going to look at risk management. Now, risk management in forex trading is a set of strategies and techniques employed by traders to mitigate the potential losses associated with their trades. Now, listen, everything that we do in this world has come with some risk. Wherever I am right now, I don't know, in the next second, I can even die. Nobody even knows what will happen in a second. Okay. You can say that I'm going to put my money in the bank. The next day, you hear that the bank has collapsed. So there's risk, like everything uncertain. Everything is uncertain here. Okay, nobody knows what's going to happen in the future, but we do things based on our beliefs. So you are keeping your money in the bank that because you believe that this bank is not going to collapse now. There are high chances it's not going to collapse now, but because it can collapse. But there are high chances it's not going to collapse now based on the previous data that you have had and examined or interpreted. Okay. So what are some of the strategies you put in place in order to ensure that if the bank that you have your money there collapses, you are not going to find yourself wanting? Maybe you put small part of your money there, or you have it diversified. One at small at EcoBank, Fidelity. So in case EcoBank collapses, there's Fidelity. All those things we call them the risk management. When you sit on Okada, you ensure that you have your helmet on. That's risk management. Okay, because anything at all can happen. The same thing applies with trade. And I realize I told you that one key thing that you need to pay attention to as a trader is your lot size. That's the first step for me. Lot size. Okay. Ensure that you have a very small lot size. And then you place your trade. You make nice profit, you keep it. Okay. Then stop loss. In case the thing that you bought is not appreciating in value and you're not getting what you want, just take the small loss and leave. Don't allow yourself for the market to keep going the up and down, keep panicking and all of that. No. It's like you bought a phone for 1,000 cedis, you want to sell it at 1,005. People are saying you're not getting good like numbers for it. Then somebody say give me 900. You say, okay, well, yeah, I'll just take the 900. At least I've lost 100 cedis. I'll add some, or I'll just find a way to buy something and ensure that whatever I'm going to buy now at this time high stands the chances of giving me good profit. Okay. That's with the lot size. Okay. And then take profit. Okay. Take profit. Now, take profit is somebody will make a profit of say $10. Be like, hey, right now I've made $10. If I should leave it, I can make even $20. Please have a plan that this trade, if in case it's not going my way, I'm ready to just lose $1. But if it's going my way, I'm ready to take a profit of $5. When it gets to $5, take it and leave.
Hello,
Finish
hello.
it.
Of course, I have
That's
a
what.
question.
Yeah, yeah, yeah,
So if you place a trade, then
yeah.
let's say it reaches maybe profit of maybe $1.
Right.
Is there a maximum, like based on the lot size and what you place? Is there a maximum profit you can get, or it can just keep going till?
Oh no, it can keep going. Can keep going,
Oh, okay.
going.
Even if
Sir.
you traded with just something small.
Yeah, time something small. It can keep going. Once it is going, or based on your analysis, going in your direction, it'll keep going. When we are done with this, I'll share something with you. Yesterday I was just checking some things online. Then I realized that cocoa, price
Yeah.
of cocoa, 1 ton is now selling at 5,000 USD. But Ghana here, 1 ton, they are buying it at 1,007 USD.
Wow.
which is unfair. This is just by the way, but I'll look at it right now. But if you look at how cocoa is going up, it's serious. I'll show you. Then you see how like there's some of these things that we are talking about reflect in the market. Let's finish right now, and then I'll show you that. Yeah. So yes, with a lot size and then stop loss, there's no profit limit, loss limit, and all of that. Okay. You just have to know what you want to take as a profit, what you want to take as a loss. Okay. We will do that. Tomorrow we will now have a trading plan and we have all these things in there, and then you are going to use that as a guide. Okay, so when you are placing a trade and it gets to your profit, the profit that you want, the market can give, is going in your way, it can give you profits and keep going. Okay, but maybe you are saying that, okay, I don't know how far the markets can go, so me, if I get a profit of $5, I'm fine, I'm leaving. Someone can say, if I get profit of $10, I'm leaving. That's up to their risk appetite. Okay. Please, do you have any question on the risk management? Any question? Okay. Then we move to psychology. Like I said, you need to understand trading strategies, risk management, and psychology. If you look at strategies, that's the analysis, technical, fundamental, sentimental. Risk management is risk management. We've looked at stop loss, take profit, lot size. These are the key things that you need to. Lot size is very, very key. Now, forex trading psychology. Okay, so forex trading psychology refers to the mental and emotional aspects that influence a trader's decision making and behavior in the forex trading market. So it says that mental and emotional. Okay. So what that means is that people keep complaining about the market. Oh, the market has done this. I lost my money in there. Funny enough, most of the time when you have deep conversation and then you try to analyze whatever is happening, it has got nothing to do with the market. The market is just being the market as usual. Nobody's manipulating anything because forex market is decentralized, unlike stocks. Okay, forex markets, everybody's trading from, I have my CDs, I'm selling, like all of those things. But stocks is the shares of companies. Okay, so maybe when it gets to the trading floor, they can just come up with a number and then start, selling or selling to people who are ready to buy and all of those things. But trading psychology
I
is
have a question.
most. Yeah, please, somebody else.
Which one is the indices? Like I can see some
Okay,
countries are
so
there.
indices, yeah, indices measures the performance of an asset. So, for instance, we can have, let's say cocoa. Like I said, cocoa is currently trading around maybe $5,000. Okay, you can trade
I thought
cocoa as a
cocoa fall under
commodity.
commodities.
No, it falls under commodities. But I'm just saying that out of the commodities, okay, cocoa itself, buying the cocoa itself is a commodity. Okay, like cocoa, original cocoa, you have it with you, commodity. You can trade its index, which they can say that, oh, cocoa index. That index is just, let's say, the soft, how do I even, let's say soft copy. Okay, what we have online, like cocoa online, measuring the cocoa's performance. So instead of buying cocoa, bag of cocoa yourself in the house, or like trying to do the transaction physically, which is commodities, somebody can choose to say, I'm trading the cocoa index instead, not the cocoa commodities. So what is then the index? The index measures the performance of the cocoa. Please, do you get it? So that tool or that index, that tool or that index measuring the performance of the cocoa is what I'm trading now, not cocoa itself. So the index can say that, oh, today cocoa has appreciated by, let's say, 10%. Okay, I am investing in that index instead, not the original cocoa. Please, do you get it?
Yeah.
Yes. So indexes they measure the performance of an asset. And the asset we are talking about here is cocoa, which is under commodities. But me, I'm not dealing with the direct cocoa, but I'm dealing with the index or the measure of the cocoa's performance. That's what I am trading in. But I'm not trading the cocoa itself. Example, we have CFDs. CFDs is contracts for difference. So you see that, like I said, we have online trading and we have offline trading. The online trading is Forex CFDs. So you see that one, you don't own the dollar. You don't hold the dollar itself. Okay. But you are just trading the price difference, whatever is happening in the physical world there. So that's what we call CFDs. Okay. It's the same as you saying that, oh, I'm not trading the cocoa itself, but I'm trading cocoa CFD, or I'm trading cocoa index. So most of the time, people have something like NASDAQ index. We know NASDAQ to be a stock exchange, but it's not like the traditional stock exchange like New York stock exchange, where we have traders on the floor. But it's more of electronic. So people are trading the index of NASDAQ. The NASDAQ itself is a stock exchange, but people are trading the performance, or whatever is measuring the performance of the NASDAQ as a stock exchange. Somebody can trade maybe Apple index. So Apple itself is stock. Okay, shares of Apple, it falls under stock. Okay, but somebody is not buying the shares or the Apple itself, but is trading the index, whatever is measuring the Apple's performance. That's what we call index. Now, the group of indexes is what we call the indices. Okay, so we have something like ETFs. ETFs are also there. They also measure performance. But ETF, for instance, is a basket of stocks, different stocks. So if instead of you just buying Apple, somebody's going to say, "Oh, me, I'm going to buy maybe AI ETFs." So in the AI ETFs, the person will see stocks like maybe, or let's say tech ETFs. So you see something like Microsoft, Apple, Tesla, all of these stocks in one basket. Now that basket is measuring the performance of all of these individual stocks, and that performance, or that whatever is measuring that performance in that basket, is what we call ETFs. But like I said, we have the financial market. It's big. The indices is part of the financial market. It's one market under financial market. ETFs is one market under financial market. Commodities, one market under financial markets. But the principle is the same: buy cheap, sell expensive, buy at support, sell at resistance. Please, you get it. So when you get
Yeah.
a principle for Forex, you can just move in those space. It's the same principle. Okay.
Okay.
All
I
right.
have another question.
Right.
So I tried the trading, then
Mm-hmm.
like I played the trade.
All right.
You see, there's this take profit and stop loss.
Mm-hmm.
So I wanted to like I played the trade, then I chose the
Mm-hmm.
take profit.
Mm-hmm.
Then there was a figure there, then I chose
Yeah.
trade. So I think when
Oh.
the profits, then it stopped.
Mm-hmm.
But the figure that comes there, it's not clear. Like I wish, how do you convert that figure to like actual? Maybe if it hits maybe $10, then
Okay. So we have pips, and
okay,
then we have pips. Pips is the profit in points. Okay.
okay,
So pips is just the difference. So let's say, let me give you an example. We have pips normal profit in points, and then we have pip value. Let's use this practical example. Let's say I buy a dollar at 10 cedis, and then it moves or it appreciates from 10 cedis to 15 cedis. Okay. In terms of pips or profit in points, pips, profit in points, I'll say that the market has moved, or the dollar has moved 5 pips, because it moved from
Again,
$10 to $15.
again.
Please, do you get it?
No, please, I didn't hear you. Can you please say it again?
Okay. So we have pips, profits in points.
Okay,
Okay, pips. And then we have pip value. So, like you said, the price there, whatever you see there, they are just the prices, but the price moves in points. So let's say I buy $1 at 10 cedis now. Tomorrow it
okay,
appreciates to 15 cedis. In terms of points, it has moved from 10 cedis to 15 cedis. So the difference is 15 minus 10 is equivalent to 5 points. In terms of
5 points.
points, I'll say 5 points. Okay.
Okay,
Now, if you are referring the points, like I said, percentage profit in points, the same as the pips. So somebody will say, "Oh, the Ghana cedi against the dollar has moved 5 pips from yesterday to today. 5 pips."
so for example,
Mm-hmm. No, like yes. Okay,
Okay. Okay.
yeah. So now that you know the pips, we now have pip value. Pip value. So then the question is, what does each point represent? So then we say, oh, 1 point represents 5 CD. So if you move from 10 CD to 15 CDs, which is 5 points, then if 1 point is equivalent to 1 CD, then the pip value is 5 CDs. So 5 pips, the market has moved 5 pips. That's from 10 CDs to 15 CDs. 5 pips, but the pip value in terms of CDs value itself is 5 CDs. So like the one you are seeing like this, you see the price moving some points. Okay, it's just the price
Yeah.
is maybe moving that point. But the question is, what's the value of that point? That's what we call pip value. So when the trade closes or something, that's when you will see what a pip value is, which is maybe $2, $3, or whatever. But you can also see that here. Okay, let me ask me your question first before I continue, so that I help you where you can.
Okay. So I was saying,
Mm-hmm.
um, like let's say I place a trade, maybe
Yes.
what we did today,
Yeah.
USD CHF.
Yes.
Then when I look at it,
Mm-hmm.
they take profits in the stop loss.
Mm-hmm.
I wanted to stop, like for example, maybe I wanted to stop if I make maybe a maximum of $5 loss.
$2. Yes. Yes.
Let's say $5. But I don't know
Yes.
how to calculate that in terms of the
Pips.
pips.
Yes. So now, like I said, so but you understand the pips difference, the points, blah blah blah, all of those
Yeah,
things.
I got what I
Yeah.
got. Okay.
So yeah. So what you are seeing is pip value. So I'm going to show you that when you go to BD Swiss website, then let me close this and then share that one with you. Okay, BD Swiss. Okay. I'm coming. Okay, when you come to the BD Swiss website, we have calculator. Okay, you go to research
Research.
and then you come to tools. Then
Tools.
you scroll down, you see trading calculators.
Trading calculator.
Websites, research, tools, trading calculators. Have you seen that?
Yeah.
Then you select trading calculators. Please, can you all see my screen? Okay. Please, can you see my screen? Dennis? Can you see
Yeah.
my screen?
Yeah.
Okay. So now
No,
you
we
see
can't.
that.
We can't see it.
Can you see
Okay, I
it?
can see it. I can see it.
Yeah, so we have margin, we have pip stroke point value, we have swap, we have currency converter. But what you are seeing, you have to use this pip or point value. So you click on it like this. Now the thing is that which then this is what you do. What's your currency account? Maybe it's in dollars. Okay. Which pair are you trading? Maybe Euro USD. Which volume? Maybe Euro 0.01, volume lot size 0.01. Okay. Then you tap on calculate. So please, can you see this? It says that conversion
Yeah.
rate, 1 pip is equivalent to 0.1. Please, do you get it? It's equivalent to 0.1. That's 10 cents. 1 pip,
Okay. Okay.
yes. So let's say if you are trading another currency, let's say AUDJPY. Okay, then let's say the lot size you want to go is 0.01. Then you tap on calculate like this. You see that 1 pip is 0.067. That's 0.06 cents.
Okay.
Okay, so
Okay.
if then it means that if the price is moving 1 pip, is equivalent to 0.06. So if you want to move it to 100 pips, then it's equivalent to 0.06 times 100. Is one, two, yeah, 1, 2. That's $6. So, like you said, if you want to maybe a maximum loss of whatever, maybe $6, you can write your $6 down, but you want to know how many points will it move for it to give you that loss of the $6. Okay, so you just type your lot size in there, the
Oh,
currency pair and the lot size, and then it will give you the pip, and the pip value.
okay. So for example, what we
Mhm.
did today, we did USD CHF.
Okay, yeah. Let
So
me.
I'm in that trade. I'm just looking at it. Then maybe
Okay,
stop
your lot
loss.
size.
It's showing
Yeah,
some 0 points. Gonna stop loss. The figure there. Hello, can you hear me?
yeah. I can hear you. I
Okay.
can
Yeah.
hear you.
The figure there is 0.865. Sorry, 0.86954. So
Okay.
you're saying if I want
Okay, that's
the
that's
loss
the
to be,
price.
let's say,
That's the price at which we placed it. 0.86574,
no,
whatever. Okay.
86954.
Okay, that's the price at which you bought it.
No, oh, because like
Yeah,
when
you
I clicked on the stop loss,
okay. You
then
see
a
that?
certain
Okay, let me explain this. When you see that if you are using the laptop, when you open
okay,
the
this one
laptop
I'm doing on my phone.
on your
I should
phone,
go to the
okay.
my
No, on your phone is fine. Where you have the balance, equity, and all of those things, when you place the trade, okay, just tap on it. You see the details where you have the time, the dates, and all of that. You realize that just below the USD CHF, one price where you have the 0.8 something, at the
yeah.
left price is not moving, but the right side is moving. It keeps changing. You see some arrow.
Wait, please say it again. On the phone
Okay,
or on the laptop?
on the phone.
On the phone. Okay, please say it again.
Yes, on the phone.
Okay.
On the phone, you see that where you have the balance, equity, all those things. You've placed your trade. Okay, just
Balance.
where you have your USD CHF trade placed,
Okay.
just ju- just tap on it softly. You see the details coming out.
So I tapped on it. The
You re-
details comes. Okay, okay.
you see that just below the USD CHF, the left side, you will see that we have maybe 0.8 something something something.
Mm, yeah.
Do you see it?
Like on the graph,
No, on the graph.
the
Where
open
you
price and current price.
no the
Another
yes,
one.
the open price and the current price good. The open price and the current price good. Well, that's I mean where you have the balance, equity, blah. I'm just trying to say in that like on that page. Okay.
Okay.
That's where you see your I don't know, you place the trade, right?
Yes.
So can you see the USD CHF there running, maybe in a
Mm,
loss or in a profit
yes, yes.
or
I can
whatever?
see a lot.
Right. Right. So if you tap on it, you see the open price. That is at the left side. That one does not move, but the current price keeps changing.
Oh, yes, yes, yes,
Can you see it?
yes.
Right. So now that current price that keeps the open price, the price at which you bought it, that is not changing again.
See.
It's like you buying a watch at 10 cedis and me coming in telling you that, oh, I'll give you 12 cedi. Somebody says, I'll give you 15 cedi. So the 15 cedi, 10 cedi, 11 cedi, that is the current price, the price at which people want to buy from you. Please, so that one will keep changing, changing, changing. But the price at which you bought it will never change. That is at the left side. Okay. Now, if you make profit or a loss, it's in reference to the price at which you bought it or the open price.
No, I'm not. I'm not. Hmm.
Yeah.
I wish you could
Can you
show
can
it
you show
on
that to me on
my screen. Okay, let me try and see if I can show it.
yeah.
Um, okay, so my
Yeah.
video. I don't think. Okay, so
Yeah.
at the easy it,
Okay, I'm coming. Let me
and I can see the current price and the.
okay. Okay. You are not using the MT4. Okay, that's fine. But you are not
No,
using
this
the
is
MT
the Swiss, the BD Swiss app
okay, the app.
currently.
Okay. So you have the open price.
Yeah.
Now I get it. The
Uh,
open price,
no,
the
but my
price.
actual question
Mhm.
was over here. Hold on. At the settings, the take
Okay.
profit and the stop loss. I don't know. Can you see that now?
Okay. Okay. No, your screen is off for me.
Network.
But yeah. Okay. So yes. So what you would then do is that if you want to calculate
Hello.
your
Sorry. I think
take
my
profit.
network isn't.
Okay, can you hear me? So if you want to calculate your stop loss
But
or your stop loss or your take profit, okay.
yeah.
First of all, you need to know your reference or the open price. You can just write it somewhere. And like I said, the
Okay.
open price is the price at which you bought it. So let's say if we were buying, we bought it at a price of, let's say, 0. Let me also look at this one from here. 0. Mine was around 0.87248. 0.87248. That is the price at which you bought it. Okay. Now let's say per the calculation. Hello, can you hear me? Per the
Hello. Sorry. My network.
hello. Right. Let's say per the calculation. One
Hello.
pip one yeah, hello. Oh, okay. Then or maybe we're almost done with this session. We can finish and then can we just meet maybe you are closer to maybe in 5 minutes or 10 minutes so that I explain to you one on one. I think your network is not helping. Yeah. Your network is not helping. Can we finish this and then I'll see you?
Okay.
Like you can
Okay.
come to the
Thank you.
office for just 5 minutes. Then I just take you through that. I think your network is not helping and the time to yeah. Okay, sure. Yes. But please, do we also with all of us, okay? If let's say you are not cool, you don't understand what the PIP is, the PIP value, or you don't know what the PIPs are going to represent in terms of value, what you have to do is you can come to the BD Swiss website, go to research tools, then you choose calculator, okay, and then you can now type in the currency pair you want to do, the lot size, and then it will show you what each pip represents. Okay, so if the market should move by 1 pip, it tells you that that 1 pip is equivalent to 0.11 cents. Okay. Yes, so that is it for it. Now let me quick one, let me share this. I'm coming. Okay. So we're dealing with trading psychology. Trading psychology, like I said, has got to do with every emotions that comes to play when trading. Okay, and some of the emotions are greed. Greed is when you've made a profit of $10 and you say that you already had your plan that when you get to $10, you are okay. But you got to $10, you know, I want to get 20. You already had a plan of getting $10. So what has changed? If you had a plan, written plan, then it's fine. We have hope. Hope is when you are making a loss or the thing is depreciating in value. And you in your plan you said, oh, when it depreciates your value of $1, I'm going to close it. But when it goes to $1, you're like, no, I'm not going to close it. It will reverse. The market will reverse. That is hope. Do you know how far the market can go? No. Okay. Then fear is, let's say you place first trade, you're in a loss. Second trade, you're in a loss. Third trade, you're in a loss. Honestly, on the fourth trade, you feel like you are going to lose again. But the thing is that this is trading. You go to markets like you want to start a business. You go to the market, you buy the shoes you want to sell. You bring them home, nobody buys. Or let's say tomatoes, you bring them home, nobody buys, and then because it's not durable, it's paused. You're in a loss for like 3 consecutive times. Or you know, the fourth trade is where your profit are going to start coming in. Okay, so all that you need is to have a plan. Without a plan, whatever you'll be doing will be waste. Okay, you'll be exposing yourself to high risk. You have revenge. Let's say you place a trade, you did not make profit, and it's like, no, I want to recover all that. No, for instance, you sell laptops. You buy a laptop at 10,000 CDs. Nobody was coming in to buy, and then you sold it at 8 CDs. Just relax. wait for very good markets. Maybe when schools are reopening and people are going to school, you can get into your laptop business again. But really, you didn't get the whatever that you want to say. No, I want to go back right now, but there's no market. What are you going to do? You're going to waste the money. Okay, so just have a plan. Tomorrow we'll just develop a plan and then you enjoy it. Then we have euphoria. Euphoria is when, let's say, you make a profit your first trade, second trade, third trade, fourth trade. Honestly, on the fifth trade, you feel like you're invisible to the market. So you're going to increase your lot size, no stop loss, no risk management. But understand that the market has been there, will always be there. So manage your risk properly. Now that you are making profit, is fine. Protect the profit that you have so that you can make good use of it. But if you make the profit and you say, "Oh, I'm going to risk all the profits," it's very dangerous. Then we have FOMO. FOMO is just a short form of fear of missing out. People will just be in the market, in, out, in, out, in, out, in, out. Fine. If that is going by your trading plan, then it's fine. But if it's what you are entering and coming out without going by your trading plan, then understand that fear or sorry, FOMO is setting in. FOMO is short form of fear of missing out. You feel if you're not in the market, there's something happening, the market is going to whatever, a whole lot of things. But understand that the market has been there, is there, and will forever be there. So you're not going to miss out on anything. Just relax, go by your plan. And then the last slide is thank you. So thank you for, I think we've done this session for the past 2 hours, and I think it's been impactful. And like I said, this part is a bit technical, but this is almost where all the trading, like the work, is centered. So now that we've done this, we have the video recorded, which I will share with you maybe after tomorrow. You should also take the opportunity to maybe check on YouTube some videos, and I also have some personal YouTube videos that channel, um, YouTube channel that you can check. Forex trading in Ghana. Okay, those are like old videos, but it talks about some of these things. You can just check them out and then get some of these bits and keep going. Please, do you have any question? Please, any question?
Yes, I have a
Please, any
question.
question? Okay, yeah, Clement.
Yes. Yeah. So I don't know if
Mm-hmm.
it's a suggestion or it should be a question.
Oh,
So for today
bless you.
alone, on my demo
Mm-hmm.
account, I've made like $28,000 on my demo account. So I don't know if
Okay.
you guys can do something about it, for if you can just pay me some $1,000.
Hold on. Oh, Clement. Why? What's
Yes.
that?
And
What's
I
that?
debut my
I don't
normal
know
trading
you.
account. Debut my normal trading account for me to do so. Na we me kabe anwumre akra ye course kra me got
Mm-hmm.
$9,000.
Okay, so the question that I will ask you, okay, is
Mm-hmm.
that first of all, what
Mm-hmm.
was the balance? Which balance did you start with?
Is it today?
Yes, say okay, net there now when you're saying net there today. Oh,
28,000. 28,000.
right.
Let me get better after
Yeah,
we.
okay, so today, what did you start with?
Okay. So today as at 4 a.m. So
Like,
because
let's
of
say your yes.
I don't sleep again. Oh. My equity, well, let me see. This is my equity. I don't sleep because of trading. Oh. Eh?
No, you should have a plan. So tomorrow with a plan. Okay, when we start with a plan, you then know that
Mm-hmm.
the time you know the time frame to use. Okay, so me like this, because maybe we are doing training, all of that. Okay, I can't be using shorter time frames because it means that small time I have to look at the chart, small time I have to
Okay.
look at the chart. So I prefer to use time frames like daily time frame or maybe 4 hours, so that after every 4 hours I'll go back and just check shorts. And that one crowd with maybe the currency pair that I just want to trade, maybe only Euro USD. I'll just check and then I'll leave. Okay, so that I can have time to do other things. So like you're saying, maybe you are using a shorter time frame, maybe 1 minute, 5 minutes, 15 minutes. With those ones, you keep going in and coming out, going in and coming, because the thing keeps moving. Please, you get it. So maybe when we develop a trading plan, fine. If this is working
Yes.
for you, in the end, what matters is not is about making money. Okay. So if what you are doing is working for you, if you are not sleeping, but it's giving you money. Why not? Once it's going by your plan, you just stick to it. Please, I hope you get me.
Yes.
All right. All right. Please, any question so that I can meet Dennis for us to wrap it up outside. Please, any question? But your balance there, how you want to withdraw? No, it's not possible. Demo account are for practice. So
I know say I no go withdraw. That's what I'm saying. You people should just give me some $1,000 as a reward for that.
Kingsley,
Not the total amount.
Clement is
got-
the one who doubled the 100 to 200 or so.
Oh, really? Make it drop in contact. I for meet down real quick then.
But
You,
he did
you
want to
got
link up.
you did your link up.
Yeah, so maybe when you come around, or like still, yeah, you can share
Okay, then
your
Thursday I go link come.
you go
Okay.
pass through.
Yeah.
Okay, yeah, sure.
Okay.
All right. Please, any
But
questions?
was Clement, I agree to. Your boy they greet.
I take out. My normal trading account is now $8. The $100 is now
Still glad they
250.
greet.
I still cry. They greet you, Charlie. All right, Charlie. So, I think we have bring today's session to an end. Like I said, the key things you have to understand or to be successful is strategies, which involves the analysis and analysis, then psychology and risk management. So what you can do is that maybe even after this session, you can take the time to also go online, read wide, and then get some more data. If you also have questions, you can pass through anytime or call for us to have those sessions. Please, if in absence of no question, we call today. I know I say goodbye. Bye bye.
All right, thank you, Da Costa. Yeah.
All
Thank
right,
you.
Charlie. Sure. Bye. All right.
Thank you.
All right. Sure.
Yeah, thank you.